Hello, I'm Shaun Richards of Notayesmaneconomics, and I have a few thoughts for you today, and they're based around the UK, and in particular the Bank of England. It will vote today. There's the first thing for you, so it's a case of like Hill Street Blues, I think. Let's be careful out there. They vote late this afternoon. We don't get to know until midday tomorrow, so there's an issue around that. But moving on from that, there's a particular issue with the UK at the minute, which is that the Bank of England has been warming people up for a while now, under what it calls forward guidance, that it will raise interest rates. The problem is that it's done that just at the time that the economy's shown signs of weakening. Now, there's lots of different ways you could look at that. For example, last night there were some numbers out on retail sales. The British Retail Consortium said that they dipped quite a bit. Now, there's a couple of issues with that number. It's not necessarily that reliable a guide. And also there was the impact of different dates for Easter. However, it was yet another in a sequence of things which suggest things are slowing down, which is not the best of times to raise interest rates, you might think. And there have been others here. If you look at the monetary data, there's been a weakening in money supply growth. We've also seen, perhaps for the first time, a weakening in unsecured credit. So there's various factors at play which would point you away from the Bank of England doing this. I think there's some others as well that add into the fact that it's got its forward guidance wrong yet again. And this highlights some of the news yesterday that you might have seen from the Intergenerational Commission, which comes from the Resolution Foundation. And their sort of eye-catching suggestion was that people under 25, so millennials if you like, should get 10 grand each. Now, from their point of view, in a way that's quite nice. But firstly, there's the issue of really how far would that go? But next, with their suggestion that this would help them go into the housing market, how far would this take them? We keep getting this sort of thing of so-called help for people around the housing market, but all it does is pump prices higher. So if you give someone 10 grand and they have to pay 10 grand more for a house, well, what's happened here? You've made existing homeowners better off, assuming they sell, which of course most done. But what we've got is yet more inflation. Moving back to the Bank of England theme, we see that again and again and again, it set policies to pump the housing market up. And here's something where I completely disagree with them, because they come out with the argument of wealth effects and saying this makes people better off. A few that sell their house are. But in general, there are more people that buy. And what are they seeing here? This is inflation. And this game has gone on and on and on since they started to push house prices up 5 years ago. Now, if they're to raise rates tomorrow, this would be the first time of them heading in the opposite direction, which is another reason why I'm quite doubtful about this. I think people will vote for it, but I don't think, unless there's been some real swing here, they'll have enough to do it, because what they'll be afraid of is the thing that's come around since the credit crunch began, which is having put so much effort, they would claim, into getting the economy going. The last thing they want to do in, say, a possible slowdown is raise interest rates. It slows down more and they get the blame, or at least that's how they see it. If we return to the 10,000 to under 25s, and it's a bribe of sorts, isn't it? Although they'll tax people elsewhere. Again, the next issue is what would they do with it? There's a George Best point, which I'm probably not going to do credit for, but some years ago when he said of his money that he spent some on wine, some on women, and the rest he squandered. And I think that's quite a likely prospect. If we move to the next area, which feeds into the perhaps slowing down element, which is the higher oil price we've seen. It was $77 when I was looking at earlier for Brent crude. I think there have been missiles over Riyadh in Saudi Arabia that might only push it higher. This poses yet another problem for the Bank of England. Ironically, it goes back to the fact that there was a minor sense in that they were right in the first place, as in UK interest rates do need to be higher. I agree with that. Nudging that higher now, you could see as a response to the higher oil price and the fact we might see a bit higher inflation further down in the year. But then we come back to the point of the economy slowing, and here they're caught in between two stools, really, a rock and a hard place. Which one to follow? So there's quite a bit going on, and then we come to the undercut, which is currently the level of the pound. Those who follow my research will know that I think this is a very powerful influence on the economy. What have we seen? Since Carney did his Unreliable Boyfriend Act a couple of weeks ago, we're down, what is it, 7 cents, depending how you measure it, 8 cents against the US dollar, a little bit better against the euro, but that's the equivalent of 2 bank rate cuts, roughly, once you do the numbers. So there's quite a bit to consider here as we move from one thing to the other. What do we find ourselves facing? As usual, there's the issue of house prices and the fact that they're too much of an influence in the UK economy. Why? Because our establishment want to claim it as growth. Then we look at other factors, and this is repeated around Europe, that there's the possibility here that we're seeing a slowing in the economy. So there's quite a few factors in the mix, for which I think we'll see tomorrow yet another unreliable boyfriend saga, and Carney, having made suggestions to people, won't back them up. We'll probably get promises for a future date, but we've seen that before. This whole game started in his Mansion House speech, which was back in June 2014, of promising interest rate rises, getting financial markets to move, but then not backing it up. And that's where we are. So as for you trading, good luck for tomorrow. I've done this before, I've been in the short sterling's options pit, and the one thing I can tell you is that these things are never quite as predictable as people say. Now, they shouldn't do something, but for example, Shadow Monetary Policy Committee for the Times today voted 6-3 for a rate rise. So as you can see, forward guidance isn't going very well, is it? Thank you.